and we'll see how it goes.
Thank you.
Mr. Mayor, we are live.
Thank you. Good morning, everyone. I'd like to call this April 28th regular council meeting to begin at 9:02. And we will, no open mic. Is there any additions to the agenda? Approval agenda? Yes, Councillor Hoyle.
Good morning, Mayor Bronco. I would like to ask that 10.2 be moved up to right after approval of the agenda. I would also like to add 14.1, Section 32, privileged information.
Okay. All those in favor? Thank you. I would like an approval of the agenda as amended.
Mayor Branco,
Yes.
we moved up the
Okay.
10.2 to before adoption of the minutes.
Okay,
Thank you.
Okay, so will we start 10.2 right now?
All right. You guys hear me okay? I'm all right. Coming through?
Yep.
Morning. Nice to be here. It's April. It's my first time here in April. It's great to be here. All right. I think I got a slide deck. I don't know if it's coming. There we go. All right. Okay, well, thanks again for having me here. My name is Jeff Alliston. I'm a partner with Metrics Group, so responsible for the audit services for the city of Wetaskiwin. So I'm just here to go over our findings, go over some financial highlights, and definitely address any questions or concerns that the council may have. So begin these presentations, I'd like to do a bit of an overview of an audit, so why we have an audit and the importance of it, and really it's to enhance the degree of confidence of those intended users of these financial statements. So these main users being yourselves as councillors, ratepayers, municipal affairs, province of Alberta, so those organizations or individuals with a vested interest in the financial performance of the city. As auditors, we're looking to assess if the financial statements present fairly in all material respects in accordance with Canadian public sector accounting standards. So those are the accounting standards that all government organizations report under. As independent auditors, separate from management, we design procedures to provide reasonable assurance, which is a high level of assurance, but it's not an absolute guarantee. After we conclude on our procedures and our results there, we're then able to give an opinion on the financial statements. When it comes to the responsibilities that rest with the audited financial statements here, management. So management designs the processes that ensure transactions are recorded accurately at year end and that the numbers reflect the city's true position. When it comes to those charged with governance, so oversight of the city's financial reporting process, the ultimate responsibility for the financial statements lie with council. And then for us as auditors, our responsibility again is to obtain reasonable assurance that the financial statements as a whole are free from material misstatement. We exercise professional judgment, maintain professional skepticism, and then at the end issue our audit opinion. When it comes to audit results, so in order to finalize the audit as of today, we'll complete our standard completion procedures. So we'll be looking to complete subsequent event work up to today, complete our communication, which is what we're doing right now with this presentation, obtain approval of council, then we'll be able to issue signed audited financial statements. When it comes to your accounting policies and estimates, there was a change in relation to revenue recognition. Had to do with flex passes at the recreation level. It wasn't a material item, but we do have note of that in our audit findings report as well. When it comes to procedure results, we had a couple small items, mainly in relation to other matters, your MSI funding, so just awareness there that that program is kind of done and you need to make sure those funds are spent before the ending of that period there. And then some also in relation to some segregation of duties. So again, those are just some items noted in our audit findings report. At the end here, our opinion is an unmodified opinion, so we are given a clean opinion on the financial statements that they present fairly in accordance with Canadian public sector accounting standards. The next slide here outlines significant audit risks for us. So when we are performing our audit, there are areas of focus or risk for us. So we do testing mainly or within these areas to make sure that risk has been addressed there. So we do have a couple items to note here just in relation to what I spoke earlier when it comes to the recreation revenue there, as well as the MSI funding when it comes to revenue recognition, and then as well as the completeness and accuracy of operating expenses in relation to our matters for purchasing there, just in relation to the purchasing policy and thresholds. All other areas, we have no significant findings to note, and again, the other two just kind of control deficiencies or recommendations there, but other than that, we had no significant findings to note to council. When it comes to financial results, this is a snapshot of where the city was at as at December 31, 2025. The main item to look at here is really in the middle at the net financial debt position. That has decreased from about 31 million down to 24 as you have repaid more of your debt in the year, as well as increased your net financial asset position there. When it comes to your consolidated financial assets, so this is kind of a breakdown of what makes those up, but the main two really being your cash and your investments. So if you were to add up your cash and investments minus your Peace Hills investments, about 56% of your total financial assets is tied up or in liquid assets there. Other items to note, your tax AR. Which I'll get into actually in the following slide. This one here is showing your change of cash flow, so kind of where your cash went during the year. You'll see you had an annual surplus of about 3.7 million, non-cash adjustments, which is mainly your amortization, so those all cause an increase in your cash position. You then issued a little bit of new debt, repaid some debt, purchased about 4.5 million of tangible capital asset investments, and then as well increased proceeds from your change in investments. So you went from about 16.9 million to 17.6 throughout the year with the change in cash, again, year over year there. When it comes to taxes and grants in place of taxes, so here your current tax position is up to about 1 million, tax in arrears of 1.4, and net change about 150,000. And then you have an allowance for doubtful accounts here in relation to a couple properties in which the tax amount exceeds the current assessment value. So that's where the allowance would come from on the tax side. And looking at other receivables for the city, receivables from other governments, so this is in relation to grant funding, so MSI as well as your ICIP funding and Canada Community Building Fund there. Debt recoverable for local improvements, so there's a principal reduction there as you collected tax in relation to your local improvements. Advances to agents represents your general municipal fund loan, so your clean energy program there, so that's receivable in relation to that. And then GST to be collected subsequent to your end, leaving you with about 6.6 million of receivables. When it comes to the investments of the city, so you have a couple different investments here. The first one being investments measured at amortized costs or fixed income securities. These are bonds that the city has invested in, so the principal there is secure and you're earning a rate of return or interest about 1.67 to 4.99% depending on the investment there, the bond. You also have investments measured at fair market value, which are called principal protected notes. So the principal there, just as it says, is protected, so there is no downside risk. However, those investments will either be in the money or out of the money depending on what they are tied to in relation to the market there. So the change in that one is really reflected in your measurement or remeasurement gain losses unless they are sold at a gain position, in which case you'll see that hit your statement of operations. So that's how those are impacted. So if you were to hold them to maturity and they end up being in a loss position, there is no downward impact on your statement of operations when it comes to those investments. This slide here is showing your consolidated investment composition. So just that your fixed income securities are down in relation to the prior year, and you saw a bump here in your principal protected notes. When it comes to the liabilities of the city here, the large one being your concession liability, which is really a liability associated with PCL's utilities there for 48 million, long-term debt of 9.7, and then as other items such as AP and deferred revenue. So when it comes to the deferred revenue, these are in relation to grants that the city has on hand to be applied to projects. So during the year, you collected additional 4.2 million, so mainly your 2025 allocations. Recognized revenue in relation to specific projects such as 40th Avenue utility infrastructure, sidewalk reconstruction, Wetaskiwin Spray Park, and as well as a road renewal project. So those are projects that the grant funding was used in order to fund those. And you got 6.6 million left going into the next fiscal year to be applied to projects going forward. When it comes to the city's debt limits, so your debt limits based on the Municipal Government Act are calculated at roughly 1.5 times your total operating revenue. So in this case, about 55.4 million. Your current total debt is 9.7, so you got about 45 million still within the Municipal Government Act within your limit. Your debt servicing limit is 0.25 times total operating revenue, and that is your principal and interest to be repaid in the upcoming year. So your limits there are 9.2, your actual is about 1.3 next year, so you get about 8 million in room there. So it's definitely well within your debt limits. When it comes to your non-financial assets, your consolidated tangible capital assets here, you'll see you'll have additions. About 4.4 million. So again, projects such as the 40th Ave utility infrastructure, spray park, road renewal, sidewalk rehabs. Those are kind of the bigger items that make up the additions there. And then your amortization expense of 7.2 million, which represents the usage of your assets. So as you purchase assets, they last 5 years, 10 years, 20, 40 years. You take a percentage of those assets and you amortize them into your operations, kind of representing the usage of that. So you added about 4.5 million, used about 7, so you're seeing a decrease there in your net book value year over year. The next slide here is your accumulated surplus. So your net debt position plus your non-financial asset position yields an accumulated surplus of about 178 million. The change in your equity and tangible capital assets is very nominal here, about 20,000, with the unrestricted and restricted making up about 3.7 million. So the change there is really indicative of your annual surplus, which is causing an increase to your unrestricted and your restricted surplus net overall. So kind of indicating that you have more of a cash surplus as opposed to a surplus that's really tied up in tangible capital asset purchases. I spoke earlier about the investments. So here you'll see the remeasurement gains and losses. So as of December 31, 2025, your principal protected notes are in a net positive position of about 43,000, and that is where those are tracked in relation as those products move forward. So that's where it gets tracked, and then if they're ever sold and it's set in a gain position, you'll see an adjustment to your statement of operations from there. When it comes to their statement of operations here, so your consolidated operating revenue, so total revenues for the city here at 36.9 million, up about 1.56 or 4.4%. So you saw an increase in your net municipal property taxes here, about net 10.2%. So that was in relation to rate and assessment increases. When it comes to other revenues of 2.9 million, there's additional money, third-party money received for spray park funding that was in there, as well as your creek crossing arbitration. So those are where you see additions to your other revenue. Sales and user charges were down to 2.9 from 3.1. Government transfer operating, prior year you had additional police funding there, so that's where you're seeing the change in that category. And then again, a net increase year over year of 1.56 million and about 5.5 million above budget, or 17.6%. This slide here shows you how your budget being the line represents in relation to your actuals. So all items were either at or above what you had initially budgeted for there. When it comes to your consolidated expenses by function or department, so total for the year here of 38.5 million, up from 37, so about 1.4 million or 3.8%. Some changes year over year, your water supply and distribution, you did see a decrease in your electricity costs when it came to that area. Wastewater treatment disposal, you see an increase here up to 2 million from 1.2. That's mainly in relation to amortization expense, increasing in that area for additions. And then if you look compared to budget, about $326,000 difference there, or 0.85%. So looking at this graph here by department, you do see a couple items that are over and above. So transportation is really in relation to amortization expense. Your water supply and distribution has to do with the water treatment not being budgeted there. Your wastewater treatment and disposal, you had more amortization than you had initially budgeted for in that department. And then culture and FCSS, those get consolidated, so that's the library and FCSS, they get consolidated into your financial statements, but the budget is in relation to what the city budget's, not what theirs is, so that's why you're seeing those above. This next slide here is giving you what you actually spent the funds on. So here, although your overall expenses exceed the budget, you'll see the accretion expense of $188,000, provision for allowance, your amortization is above what you had budgeted for. So those are really what's causing the increases there. Looking at salaries, wages, and benefits, you have increased FTE year over year, so you had spent more there. Contracted and general services, your policing costs were down, so that's causing the change in that category. And then your provision for your allowance at 404, this is in relation to receivables that are deemed to be uncollectible. So that's adjusting the allowance that we had seen on previous slides when it talks about your tax AR and your other receivables there. After looking at revenues and expenses, the next line item on your statement are your consolidated other income and expenditures. And these are items that are more in line with representation of your tangible capital assets. So government transfers used for capital, such as your local government fiscal framework, MSI, Canada Community Building Fund. Gain loss on the remeasurement of asset retirement obligations. You also had amortization of concession liabilities there of 1.1 million. That's in relation to the loan there for 48 that's on your books for a total of about 4.3 million. So this slide will summarize your statement of operations for you. So total revenues of 36.9, expenses of 38.4, and then other income of 5.2 left you with an annual surplus of 3.7. If you were to take your unrestricted and restricted surplus changes, that's the change that you're seeing in the reserves there. So again, more of a cash surplus when it comes to the 3.7 million. So in summary, we're issuing an unmodified opinion, so a clean opinion on the financial statements. They present fairly. We did note some control deficiencies in relation to segregation of duties as well as purchasing in our audit findings report. Change in policy in relation to the recreation revenue and how that was accounted for. We also noted matters related to unspent MSI funding. So again, just noting that program has changed to the LGFF, and you want to make sure that those funds are being allocated towards projects here going forward before that expires. Your net financial debt position is down to 24 million from 30 as you continue to pay down your liabilities there. And then an annual surplus in the year of 3.7 million when you take revenues less expenses plus other items. So with that said, if anybody has any specific questions in relation to the audit of the financial statements, I can definitely take those.
Thank you. Councillor Hoyle.
I move that we moved into closed session.
Okay. All those in favor? Carried. Thank you.
Yes.
Yes, because we need to see our files. Thank you. I have all my papers, though. Take that.
Mr. Mayor, we're live.
Thank you very much, Jacqueline. I'd like to have a motion to come out of camera, please. All of those in favor? Thank you, carried. Councillor Nielsen?
Thank you. I'd like to move the council approves the 2025 audited consolidated financial statements for the city of Wetaskiwin as presented. And if I may, I'd like to make a couple of remarks.
Please go ahead.
Thank you. First off, on behalf of council, we'd like to extend our appreciation to the finance department. Based on our private meeting with the auditor, some very favorable comments were made with regard to the cooperation they received and the fact that our trajectory is in a positive place going forward with audits. And the comment also is that this is one of the first audits in some time where we have met provincial timelines. So congratulations to everybody, but thank you to finance.
Is that the only questions you have, Wayne, or do you have any more?
No, that's it for now. Thank you, Mr. Mayor.
Thank you. All of those in favor accepting the financial statement as presented? All those in favor? Carried. Thank you.
Thank you, Mr. Mayor. I have another motion coming out of our meeting with the auditor.
Please go ahead.
In any audit, the auditor makes a number of recommendations, and I'll make the motion, and then if I've got any further comments. I would like to move that council directs administration to add the following items to the task action summary report with targeted completion for the end of Q2, and they include A review of user access be completed to ensure access to accounting modules be limited to staff based on their job responsibility. B, review of user access as a power user to senior management only, with any exceptions from senior management being cited with the reason for their access. C, review and update purchasing policy to establish a control to monitor and ensure appropriate approval processes and threshold criteria. D, review and update ActiveNet FlexPass revenue recognition to comply with Public Sector Accounting Standard PS 3400. And lastly, E, provide a report to council reflecting how the unspent $1.2 million MSI revenues will be applied to projects to meet the 2028 deadline. And I believe that's all been presented to legislation. And if I may, Mr. Mayor, these are simply some of the recommendations, these are the recommendations coming from the auditor, and all I want to do is ensure that there is a way that we can track the actions of administration in completion of these and meeting these auditors' recommendations.
Thank you, Councillor Nielsen. Councillor Billingsley.
Thank you. Through the chair to administration, in the motion, it talks about completion by the end of Q2. Is this a reasonable timeline?
Through the chair to Councillor Billingsley, I would have to confer with our information technology department to ensure that they can meet that timeline.
Thank you.
Any further questions? If not, we'll have a vote on the motion. All of those in favor? Carried. Thank you. I would like to move into item 3, approval of the agenda as it is presented or amended.
Mr. Mayor, we are on 4.1.
Okay, that's what I thought, but I was told wrong. Okay. Can I have an adoption of the minutes, please? Councillor Nielsen.
Thank you. I move the council adopts the regular council meeting minutes for April 14, 2026 as presented.
Thank you. Any questions or corrections? If not, All of those in favor, accepting the adoption of the minutes? All those in favor? Thank you. Carried.
Thank you, Mr. Mayor. I move the council adopts the special council meeting minutes for April 20th, 2026 as presented.
Thank you. Any questions or changes or amendments? Not, I'll have a vote on the special council meeting of April the 20th. All of those in favor? Carried, thank you. Consent agenda? Not. We'll move on. Business arising from minutes.
Point of order.
Go ahead. Councillor.
Joe, for the consent agenda, I'd like to pull 6.1.
Thank you.
And then I move that council approves the consent agenda as amended.
Thank you. All of those in favor? Carried. And we'll move to 6.1. Laura, please.
Thank you, Mayor Branco. 6.1 is the council action task summary. I have one item on it that I'd like to highlight and have a question through the chair to administration. Have an item listed as complete as of this date. The item is that council directs administration to develop a process for tracking and reporting on capital projects that include tendering dates, tender award dates, work commencement dates, and work completed dates. I have not seen that report, so I'd like it to be not completed, and I'd like an update on that through the chair to administration.
Through the chair to Councillor White. So this was originally going to be in the city manager's report that would have come today. However, at agenda planning, that report was moved to May 12th, and so council will get that report on May 12th. And we can certainly bring this back and keep it on CAT so that after the report comes, council can see that it is completed on here.
Thank you.
Thank you. I have a motion to accept. Dean?
I move that council
ahead.
accepts the council action task summary report of April 16th, 28th. Is that right? 28.
26.
It says 16th as information.
Okay, you're correct.
Yeah.
All of those in favor?
That's right, okay.
So we need to change that to the 28th?
To the chair, no. So the CATS does have the April 16th date on it, as that is driven by our agenda timeline. So the information is accurate as of April 16th. So that's why that date is there.
Thank you. All of those in favor? Carried, thank you. Is there any public hearing? I don't see any. Delegations? No. Committee of the Whole, staff reporting.
Mr. Mayor, that item was under consent agenda. It was not pulled, so it's already been
Okay.
approved.
Thank you. Thank you, Mr. Nielsen. Item 9.9 or 9.1, consent, I guess that wasn't pulled. Correct, so we'll move into staff reports for decision. Taxation of farmland.
Good morning, Council. The purpose of this RFD is to provide some options to Council regarding the taxation of farmland. The assessment of farmland is regulated through the assessment regulation, referred to as MRAT, which is matters relating to assessment and taxation. And farmland is currently assessed at a regulated rate in all municipalities as determined by the province of Alberta. There are currently 23 parcels of farmland in the city assessed as follows: 9 parcels assessed entirely as farmland, 13 parcels with 3 acres assessed at market value and the remainder assessed as farmland, and 1 parcel which is exempt. Administration is proposing The council sets a tax rate for properties assessed as farmland for the 2026 year and going forward. To date, in the city of Wetaskiwin, taxes has been levied on properties assessed at farmland at the residential tax rate. The reason why administration has brought this forward is for equity and to encourage development in the municipality. Based on the 2025 residential tax rate, since the 2026 tax rates are not yet passed, increasing the tax rate even to the non-residential tax rate would have generated incremental taxation revenue of just over $6,000. So we've brought this forward because the Municipal Government Act does not limit the rates that council can set for properties assessed as farmland. Thank you.
Council, could we pause for one moment? We seem to have lost the mayor temporarily.
Sorry about that. I touched something. Go ahead. Sorry. Councillor Hoyle.
I move that the taxation farm motion 12326 previously tabled pursuant to motion number 12426 be lifted from the table.
Okay, a motion to have it removed from the table. All of those in favor? Carried. Thank you. Councillor Billingsley.
Thank you. The motion that I put on at the last meeting was the pending motion of number 123-26. The council sets the property tax rate for properties assessed as farmland at 10 times the residential tax rate in the 2026 Property Tax Bylaw. And I'll follow up with that if I may.
Yes, you can, please.
I stated at the last meeting the reasons for it. I still stand by those, and I'm still in favor of the 10 times the residential rate as a start to at least have some equity within the tax situation.
Any debate? Councillor Elder.
Yeah, so I just have a couple questions. I'm not in favor of this, this is good. I just have a couple questions. Raising the tax rate for the reasons we're stating to encourage development possibly. Have we had any conversation with these landowners, and do we have a plan in place to encourage development in this? Because just taxing them doesn't seem like much encouragement to me.
Who's your question to?
Okay, I'll question it to yourself then.
To me? Sure. I'll answer that. Has there been conversation? Yes, there has been. For many years of economic development, whether all the property owners directly, probably not, but some of them, absolutely. And to me, this also talks about fairness. We all in the community pay a portion of our taxes, the taxes that we pay is equitable through all, except for the farmland. They pay substantially less than what you pay on your property and what any of the business properties pay. And what I'm really hoping for of this is to spur some development.
Yeah, I'm not against that at all. I think your number's probably a little low to spur it on, but,
You can change it through an amendment.
no, I know. We'll-
And that's the reason why, because for years it has been that $6,000 or the calculation to how we got to the $6,000 this year. The 10 times the residential rate is still a far cry if it was assessed at commercial. It'd be 110 times.
Correct.
Which is a far cry from 10 times. But I'm not looking to penalize as per se, or as some may call a tax grab. This is more, hey, we're serious about this, we're looking for development, and we're also looking for equity among the community.
Okay, yeah, and that's where I was going. Like, so have we had recent, like you've stated, you've had conversation in the past.
Not me personally.
No, but either economic development, have we had recent conversation with any of these guys to say, let's sit down and say, here's where we're going to be going with this because we need to grow? Has that happened, or do you know? Like, I'm just curious.
That would be an administration question to economic development.
Okay. Okay, so I'm good. Thank you.
I do have a question, Dean, Councillor Billingsley. Are we doing this just for this year or next year or more years to come to get more revenue?
Well, the motion states for 2026. If next year, if council decides that they want to go to 110 times, that certainly could be a motion that is brought forward, or it's not. Unless this is brought back next year, it reverts back. This would not be a permanent, is that correct?
Through the chair to council, annually, council gets to set the tax rate.
Right.
So it can be changed annually.
So if I may, so we're looking at basically a 30% increase for farmland this year. 10 times more than 3%, 30%?
No.
What's the percentage of increase that we're looking at to these farmlands?
Through the chair to the mayor, the 2026 tax rate has not been set. I will be able to provide that percentage once it's set.
Thank you. And my other question, if we don't see, are we putting a deadline on some of these lands to have development within the next year? And if they don't, or I know we got to choose next year, but if we see no movement after increasing this, something to learn from? Go ahead, Councillor Billingsley.
Thank you. Through the chair to, I guess, yourself. This only speaks to the tax bylaw. What we choose to do over the next 9 or 12 months, what you're saying is absolutely true. The whole idea of this is to spur development and just to collect the money and not actually do anything as far as progressing on as far as development goes would not be wise, or something that I really think that we should take a look at. But it has nothing to do with this.
Councillor Nielsen.
Thank you. Through the chair to Toulouse, if this is to pass, or were to pass, what is the increased revenue from where we've been to what will be?
Through the chair to Councillor Nelson, based on the tax rate in 2025, the enacted bylaw, property tax bylaw, 10 times would generate about $62,000 in revenue. So that's saying currently, based on the 2025 property tax bylaw, they were levied at the residential rate. Any increments to the residential rate brings in, based on the 2025 rate and the increase of 3.87% proposed during budget, an additional $6,100 per increments that it is. So if it's 10 times, it would bring in approximately $61,000. If it's 5 times, it would be just about 30,500 based on 2025. Thank you.
Thank you.
Any, Councilor Nielsen?
Thank you. Through the chair to my colleague, Councillor Billingsley. There's a number of factors in play resulting in this motion. One is equitable tax distribution, fairness to taxpayers across the city. The second one is to incentivize consideration for dispersal of what I would call land banks, farmland banks, for development. Why was the number 10 times residential rate in your mind? Because the next question coming out of that is, no, I'll wait for your answer.
Through the chair to Councillor Nielsen, because for me, it became, I don't want to be all of a sudden somebody getting a tax bill that is 55 to 100 times what they were currently paying without, as Councillor Elder had said, further discussion. The amount of dollars to be equitable would be substantially more than 10 times. And next year, it certainly could be bumped again by another whatever if it's deemed to be a wise decision. So why at 10 times? To show the landowners that we are serious about development and equitable tax without to the point of somebody having sticker shock.
Thank you. And I know you've crunched some numbers, and I don't know if you have them at your ready. But currently, farmland is assessed at what? And if it was assessed at commercial rates, it would be assessed at what?
So I don't have the exact numbers. Yeah, so if we were to, I think it's about 55 to 58 times would be equivalent to the residential rate. Is that correct?
Through the chair to council, close. 55 times would be closer to market value.
Yes, of market value of the property at commercial rate or at residential rate.
There's no rate. It's just the
Of the
assessment.
Yes,
would-
55 times, correct.
So it currently our assessment for farmland, based on the regulated rates, is at 525,540. The equivalent market value, if it was assessed at every other property, would be 29 million.
29 million.
And that speaks to your fairness in equitable tax distribution.
Yes. Having said this, I don't want this to get lost after this year, right? I mean, in other words, what Mayor Branco said was, what are we going to do with this? I mean, this can't be just taxed and then forgotten about, in my opinion. This should, we really need to then, as a council, give direction of use this as ammunition, I guess, or incentivize development.
And I guess what I'm leading up to, and I think what Mayor Branco was leading up to, and possibly Councillor Elder as well, is that if this passes, I'm assuming this would be our first step in moving the tax rate on farmland if we really want to be serious about hopeful development stemming from these land banks. Would you concur with that?
I would.
Thank you, I'm good.
Thank you. I do have a couple questions. So I agree with you, Dean, but I disagree. We look at to give tax incentives to people to build or develop in our community. In this way, it kind of, I look at goes the other way for tax. But one question to administration, if we do this and raise gets passed, does that mean for future consideration of Wetaskiwin annexes farmland, we'd be paying 10 times more?
Through the chair to Mayor Branco, the property tax bylaw is passed on an annual basis. Council chooses what rate it sets for each class of assessed property. Some classes have restrictions placed on it by the province. For example, your non-residential rates cannot exceed 5 times your residential. There is no such restriction on farmland. So council has the ability to change the rate change the tax rate levied on all classes of assessed properties annually.
But I understand that. But if we were to annex this, or if you were to increase this tax, and we decided next month we wanted to annex some land, we'd be paying that land at that access, at that value that we just increased, correct?
Through the chair to Mayor Branco, annexation is dealt with completely differently. Annexation has to be approved by the province, and there are conditions usually set when land is annexed. That is very separate. Whatever rules are set in the annexation document is what would then go into the tax rate bylaw.
Councillor Nielsen, you're thinking.
You sound surprised. No, I guess just to your question, we can potentially access land without owning the land. So we wouldn't be paying anything on it if it was annexed.
Well, you have to pay the farmland annex if we're annexing it, right?
No, the owner. We are simply annexing someone else's property into city limits. We are not acquiring ownership of that property when we annex.
Okay. Any further debate?
Sure.
Councillor Nielsen.
I would like to make an amendment to the motion. And I would
Go ahead.
like to set the property tax rate at 15 times the residential tax rate. And let my colleagues wrestle.
Councillor.
And if I could speak to my amendment, please.
Sir.
On the one hand, the motion says we want to encourage development. We want fair tax distribution. We want to unlock some land banks or encourage the same. And yet we put a number in that says hey, landowners, we've got some concerns. We're gonna try and catch your attention that we're serious about development in our community, and we're going to be serious about equitable taxation, but we're just gonna poke you a little bit. Recognizing that we might nudge you again in the future. I, for one, don't understand what the value is in our community for farmland in our city limits. I almost see it as a luxury tax, and that would be the reason for my amendment. I want the message to be very loud and clear that this council is open for business. We want to see some development, and the people who own the properties that can unlock them for development need to understand we're serious. Thank you.
Councillor Elder.
Okay, so this might be a question for admin, it might be a question to council, because I just don't know. So currently, when people buy land, do we have a 2-year time limit put on there, for example, or is there any time limit at all to develop, where they can just buy land and it's land banked? Is that how it currently sits? It could be too, I mean, I'm not sure.
Through the chair to Councillor Helder, purchase of land or sale of land are private transactions. The city would not necessarily know when those occur.
Okay, so acquiring farmland right now, can we as council put restrictions on there to say, if you purchase it, you've got 2 years in which to develop?
Through the chair to Councillor Helder, we would have to confer with our planning and development team because development is per our development agreements, but again, transactions involving land are private transactions. The city does not get involved in those private transactions except for city-owned land.
Okay, so I don't mind where it starts at 10 times. I think it could go up a whole lot, but I think what I would like to see something happen here where we as the city have some kind of direction and purpose for that land right now. Like right now we're just saying, hey, we're going to do this to encourage you, the landowner, to start thinking about developing. I would like to see something from the city to contact these people and say, here's what's going on. We have this potential, and if we just get turned down and say, nah, we're just happy with having bare land, I could add a 0 to the 10 real quick. But I just don't think we have anything strong in place yet. So I don't mind starting here, but I think we as council need to get a stronger plan in place moving forward.
Councillor Billingsley.
I think it's important that we speak to the motion that's on, or the amendment that's on the table first, and then from there, if you would like to make a motion directing administration in some other way, I think that would speak something different than the motion that is currently on the floor.
Correct. So the motion on the floor is to bring farmland to 15%. All of those in favor?
No, correction, it's to
increase it 15 times.
The tax rate for properties assessed as farmland at 15 times the residential tax rate.
Okay,
Correct.
all of those in favor?
Point of order, Mr. Mayor, we need to vote on the amendment first and then the motion.
Okay, that's what I thought I was doing.
Thank you.
We're voting on the amendment. All of those in favor? Oppose? Tied. Defeated. Next one. Motion of Councillor Billings, 10 times. Any debate? Not a motion on 10 times the tax. Correct? All of those in favor? Oppose? Carried. Thank you. And we'll move 10.3, tax recovery. Or are we still on 10.2? Financial audit?
Mr. Mayor, we are on 10.3.
Thank you. 10.3, tax recovery bid.
Hello again, Council. Annually, Council must approve reserved bids and conditions for tax recovery properties listed on the arrears list. Administration annually submits an arrears list to the province for properties with taxes in arrears. These are usually properties that have not paid amounts owing in excess of 2 years. My apologies with my words this morning. There are currently 41 properties on her tax sale list for 2026. 40 of these are property tax recovery relating to land, and one of this is for designated manufactured homes. For a designated manufactured home, we have a longer list this year because the recovery this year includes 2 condominium buildings that have 18 units in each building. Whilst not all the properties are on the arrears list, we are currently working with the owner of this condominium building to enter into a tax agreement for the recovery of the said taxes. However, today we do need council to establish the conditions of the sale. These properties have been provided to you in your package, and the proposed reserve bid is based on the assessed value of these properties for the taxation year 2026. The proposed conditions of sale are as follows: 10% non-refundable down payment by cash, bank draft, or certified payment on the auction date, which is proposed at this time to be Wednesday, August 12, 2026 at 10 a.m. in the Wetaskiwin City Hall Council chambers. Full payment is to be made within 30 days following the auction date by bank draft or certified checks. It is worth noting that property owners have up to the date and time of the public auction to pay the tax arrears or to enter into a tax agreement with the City of Wetaskiwin. Administration will contact the property owners prior to the auction date of the imminent tax recovery sale, after council has approved the reserve bid and the conditions of the auction and the public auction date. Some of the recovery efforts that administration has entered into prior to today is letters to property owners notifying them of placement on the arrears list, phone calls to encourage entering into a tax arrears agreement. Property tax statements are mailed when penalties are added to the property tax account. We do anticipate that some of these properties will come off the list prior to the auction date, just through conversations with the property owners. Before the auction, there will be advertisement placed in the local newspaper, as well as in the Alberta Gazette, as required by the Municipal Government Act. Thank you.
Councillor Nielsen.
Thank you, Mr. Mayor. I move the council approve the reserve bids and the terms and conditions of sale for the 2026 tax recovery sale as presented. I do have a question.
Go ahead, please.
Through the chair to Lou. In reading the the preamble. It states if a person enters into a tax arrears agreement, it allows the property owner to pay all arrears and current property taxes in no more than 3 years. So my question is this: once an agreement is made, are the penalties frozen, or do the penalties continue to accrue over that 3-year period?
Through the chair to Councillor Nelson, the penalties continue to accrue.
Thank you.
Councillor Hoyle. Is your mic on?
My apologies. Through the chair to Councillor Hoyle, that is correct. This is a condominium, so there's 18 individual units that have individual roll numbers. Through the chair to Councillor Hoyle, it is owned by one individual.
Councillor Hoyle, is your mic on?
Through the chair to Councillor Hoyle, you would have to enter into an agreement for each roll number. You would have, the owner would have to for all units if he
thank
would
you.
like to.
Okay,
Thank you.
and then my second question is, we do this every year, I believe, so are any of them from last year?
Through the chair to Councillor Hoyle, no.
Okay, thank you.
No further questions? All of those in favor? Approved, thank you. We'll move into bylaws. Property tax.
Hello again, Council. The 2026 Property Tax Bylaw, Bylaw 2107-26. This bylaw sets the property tax rates to be levied on all properties within the city of Wetaskiwin. Earlier in this meeting, Council set the property tax rate for farmland, for properties assessed as farmland at 10 times the residential tax rate. The 2026 tax rate bylaw has been prepared to meet the requirements of the Municipal Government Act, the budget requirement as set out in the 2026 operating budget and capital plan as approved by Council, and details of the assessed the property taxation revenue that was required to fund the 2026 budget is $22.1 million. Over the years, administration has maintained the non-residential to residential tax ratio at 2:1 for municipal taxes. The maximum limit as set by regulation is 5 times. For the 2026 year, a property tax bylaw, slightly amended compared to what was initially in the agenda, has been sent out to Council, and the proposed rates are as follows. For residential, 0.0111,969. For farmland, 0.1119690. For mature area derelict residential properties, 0.0223938. For non-residential properties, 0.0223938. Machinery and equipment is exempt from taxation in the city of Wetaskiwin. Additionally, with the 2026 property tax notice, the requisitions are set by the Alberta School Foundation Fund, the Separate School Foundation, the Seniors Foundation, and designated industrial property do have to be collected. on behalf of the school board, the Seniors Foundation, and the province. The rates for these are as follows. For the school board, for residential, it is 0.00266762. For non-residential, it is 0.0039362. The rate for the Seniors Foundation, which is collected on behalf of the Wetaskiwin and Area Lodge Authority, is 0.0001841, and the requisition rate for designated industrial properties, which is collected on behalf of the province, is 0.0000728, and this is only levied on industrial property. I also do want to add that this would result in about $47,214 collected in excess. These rates would result in $47,214 collected in excess of the fund requirement as set during taxation. This additional funds is specifically from the levying of 10 times the residential rate on farmland property. If council were to approve these rates, a subsequent motion would be made to have that transferred to a reserve as selected by council. However, depending on the rates that council chooses at this meeting, that number could change. Thank you. Before I get off the mic, the one thing I do want to point out is that these rates also represent a 1.24% decrease when compared to last year's tax rate. 1.27. Sorry, I have too many scenarios. Thank you.
Councillor Billingsley.
Thank you. I move that City Council gives first reading to the 2026 Tax Rate Bylaw 2107-26 as presented. And I do have a question.
Please, go ahead.
Thank you. So back in November when we did budget, we anticipated a 3.87 increase in taxes, I guess. My question is, including the 10 times to the agricultural land or farmland, what number can we say as a council going forward is the actual increase on average?
Through the chair to Councillor Billingsley, can you be a little bit more clear?
So in November, we touted 3.87 increase.
Okay.
Today, if the numbers that have been presented, including the 10 times, and if we decide that that $47,000 goes into whatever reserve, what number can we announce as far as an actual increase?
Through the chair to Councillor Billingsley, there would be no increase. There would be a decrease of 1.27% to the following assessment classes: residential, non-residential, and residential and non-residential. Farmland would still have an increase of about 887%.
So we would be lowering the tax rate to both residential and non-residential by 1.24%.
By 1.27%.
2.7, thank you. Thank you. Because the assessment went up.
Councillor Nielsen.
Through the chair to Administration Toulouse. Toulouse, right now the mature area derelict residential is tied to non-residential?
Through the chair to Councillor Nelson, based on our bylaw, the rate that was established for mature area derelict property assessment class is the non-residential tax rate, which is 2 times the residential.
And if there was if there was an interest in breaking out mature area derelict residential, is it as simple as simply addressing it through policy or bylaw, or is that legislated through MGA or some other legislation?
Through the chair to Councillor Nelson, the city chose, it's in our classes of property assessment bylaw of the city. We chose to break out mature area derelict residential properties following on when the city of Edmonton did it. I think it was a couple of years ago. There is no specific legislation that governs whether or not we can have that assessment class or not. It is still considered residential. Council is just setting a different tax rate on that class.
Okay, fine, thank you.
For clarification, Toulouse, so we're going from 3.7 to a 2% tax increase?
Through the
Is that correct?
Through the chair to Mayor Branco, we are going from a 3.87% estimated increase when the budget was set to a
Right.
1.27% decrease in tax rate for
Okay.
the residential assessment and non-residential assessment classes. Farmland will see an increase because their rate is now higher than it was in the past, of about a 887% increase. Thank you.
Thank you. Any further debate? Vote on the first reading. All of those in favor? Carried.
I move that council give second reading to the 2026 tax rate bylaw 2107-26 as presented.
Any debate? Councillor White.
This isn't debate, but I prepared a statement that I'd like to make. I intend to vote in favor of this again. Today, City Council approved the audited financial statements, and I anticipate that we are en route to approve a 2026 property tax rate. These are among the most important decisions that we make, and I approach them with full understanding of the weight they carry for our community. The budget we are funding reflects a careful balance, funding the essential operations that are to keep our city running, while we also take a meaningful step forward by paying down another $1 million in debt. It is about meeting today's needs and while strengthening our future. At the last meeting, we approved an updated reserve policy, and by funding reserves through our annual budget process, we are creating a more disciplined and transparent approach to long-range planning, ensuring we are setting aside resources today for the infrastructure, services, and priorities of tomorrow. I look forward to next year's budgeting process where we can purposely plan to fund the reserves. Last October, when I decided to run for council, I committed to serving with respect, to be reliable, prepared, and thoughtful in every decision, and to listen and learn from the people we serve. It's only been about 6 months, but those commitments still guide me today. We are working to ensure transparent financial oversight and accountability. We are setting responsible priorities, public safety, maintaining and planning our infrastructure, and keeping a long-term vision for our city at the forefront. We are also committed to demanding excellence, both of ourselves and of the public service we deliver. When I raise my hand to vote in favor of approving the tax rate, I make this decision with humility, knowing the impact that it has on households and businesses. I make this decision with respect for their contributions and with accountability for every dollar entrusted to us. Thanks for giving me a moment.
Any further? If not, called on second move, second reading for your tax bylaw. All of those in favor? Carried.
Move that council give unanimous consent to go to third reading of the 2026 tax rate bylaw 2107-26.
Any debate? Not. Vote on the third reading. All of those in favor? Carried.
I move that council gives third and final reading to the 2026 tax rate bylaw 2107-26.
Any debate? Not. All of those in favor? Oh, Councillor Nielsen.
Thank you, Mr. Mayor. Through the chair to administration, it's a loaded question. If we pass this third reading, we will see a decrease in our tax rate. At the same time, on the tax bill, there'll be other assessments, the school tax, the seniors foundation tax, which all have increases. I share that only with the intent to let our resident taxpayers understand that our portion is only one part of the tax bill. And in our portion of the tax bill, while the tax rate has been decreased, that's been able to be accomplished because there's also been an increased assessment on the property values. So even though there is a vote today to decrease residential and non-residential tax rates, if a person's property has received a higher assessment, they may see an increase in their tax bill. Would that be correct?
Through the chair to Councillor Nelson, that would be correct. Any residents that have a higher than average increase to the assessed value of their properties could still find themselves paying higher taxes than they paid last year, even though council has decreased the rate. Council has decreased the rate, the tax rate.
Thank you. And I think that also speaks to Councillor Wright's comments about council being very cognizant of current fiscal positions within our community. And I intend to support that and again applaud this council for the actions it's taken.
Thank you. I'd also like to say something. All seven of us as elected officials have always fought hard to bring our community to the best stable way to go, and raising our taxes is one of the most difficulties we have as a councillor. But just by lowering taxes or raising, we also have to think of the future. Sometimes we make decisions that may hurt the future. But I think here we're going in the right direction to build a stronger future for Wetaskiwin. So I will be supporting this. Thank you to my colleagues and thank you to administration. We are, I believe, always working for the best interests of our communities. Thank you. All of those in favor of giving a third final reading? Can I have a vote? Thank you. Passed. Correspondence, none. I believe we're moving into closed session. Can I have a motion to move into closed section?
Sorry, Mr. Mayor. We do need an additional motion for council to move the additional 47,214 to be generated from the tax rates into a reserve. My recommendation would be to the stabilization reserve. Thank you.
Thank you. So can I have a motion for that, please? Councilor Billingsley.
Thank you. I move that, I don't know, does administration have a motion on the, there we go. I move that council directs administration to amend the 2026 operating budget and transfer the additional taxation revenue of $47,214 to the stabilization reserve.
Any debate? All of those in favor? Carried, thank you. I will have Councillor Hoyle, 14.1 in closed session. Can I have a move?
Yes, thank you. Just 2 seconds while I pull up my motion, make sure I've got my sections right. I move that we go into closed session, Section 29, advice from officials.
Thank you. All of those in favor?
Hold on.
To council, it will be section 32.
Section 32, thank you for that. Section 32.
All of those in favor? And can we have a 10-minute break, please?
It is freezing in here.
Mr. Mayor, we're back.
Thank you very much. Can I have a motion to come out of in camera, please? Councillor White.
I move that we come out of closed session.
Thank you. All of those in favor? Carried. Thank you very much, and I believe that ends our, oh, no, new business? Or are we going to go for lunch? Do we have anything under new business? Nope. Then I will adjourn our April 23rd council meeting, sorry, 28th council meeting, today at 12:02. Thank you, and we'll take an hour for lunch and be back for P&T at 1. Thank you.